Every single day, people pay real money for software that claims it can predict the stock market with 90% accuracy. Before anyone pays, one question is worth more than every testimonial on the internet. If a machine could truly see tomorrow's prices, why would its owner sell it to strangers for $200 a year? Meet Alex. He is 31, has $10,000 saved, and last week an ad followed him all over social media, an AI trading bot, an 87% win rate, screenshots of glowing green profits, and a subscription price of $200 a year. The comments are full of people saying it changed their lives. Alex is not foolish. He works with software himself. He knows AI is genuinely powerful. And that is exactly why the ad works on him. If AI can write essays, spot diseases in scans, and beat grandmasters at chess, why could it not beat the market? It is a fair question, and it deserves a fair, honest answer, without hype in either direction. So here is the picture for this video. Imagine an exam with one strange, powerful rule. The moment enough students learn an answer, the exam changes the question. You memorize last year's paper perfectly, walk in confident, and find the questions have quietly rewritten themselves, precisely because so many people memorized last year's paper. That is the stock market. It is not an ordinary test that a smart enough student can crack. It is a test whose answer key erases and rewrites itself every time someone uses it. Why does the market behave like this? Because a price is not just a number, it is a summary of everything people already know. If everyone knows a company had a great year, that good news is already inside today's price, because buyers already pushed it up. Knowing what everyone else knows earns you nothing. The same way writing last year's answers earns you nothing on this year's changed paper. What actually moves prices is surprise, news nobody had yet. An unexpected result, a sudden policy change, a flood, an invention. And surprise, by definition, is the one thing nobody holds today, no matter how large their computer is. Predicting the market really means predicting tomorrow's news before it happens, and it gets one step trickier. Suppose an AI model genuinely finds a small, true pattern. Say, a certain kind of share tends to rise slightly on certain days. The moment traders start using that pattern, they buy earlier, sellers adjust, and the price shifts until the pattern fades away. The act of using the answer erases the answer. This is why patterns that glow in historical data keep dying in real life. Not because the researchers were careless, but because a market is a crowd reacting to itself, and the exam rewrites itself every time the crowd learns something new. Now let me be fair to the machines, because this is not an anti-AI video. AI is genuinely everywhere in modern finance, and banks and large investment firms spend enormous sums on it. But look closely at what they actually use it for. First, pattern spotting at extreme speed, hunting tiny, short-lived price gaps that exist for fractions of a second. That game is real, but it is played with special hardware, direct connections to exchanges, and teams of scientists. It is a race between billion-dollar institutions, not something living inside a $200 a year app. Second, risk management. Machines stress test portfolios. What happens to us if oil jumps, if interest rates rise, if three bad things happen together? Third, and this one touches your life directly, fraud detection. When your bank blocks a suspicious transaction within seconds, that is AI quietly doing its best work. Notice the theme. In the exam hall of the market, AI is a superb invigilator and a brilliant grader of past papers. What it cannot do is write tomorrow's question paper in advance. Now for the arithmetic that protects you. I call it the seller's test, and you can run it in your head. Take a typical bot claim, 10% profit every month. There is a classic shortcut called the Rule of 72. Divide 72 by the return rate, and you get roughly how long money takes to double. 72 divided by 10 is about 7, so at 10% a month, money doubles roughly every 7 months. Start with $10,000 and simply keep doubling. $20,000, then $40,000, then $80,000, then $160,000, then $320,000, then $640,000, and then $1.28 million. Count them. 7 doublings at about 7 months each is roughly 49 months. Call it 4 years. So anyone who truly owned this bot could quietly turn $10,000 into more than $1 million in about 4 years, sitting at home, telling no one. A few more years of that, and they would be among the richest people on Earth. Instead, they are selling subscriptions for $200 a year, running ads, and chasing strangers like Alex. The claim does not fail because the maths is wrong. The claim fails because the maths works, and the seller's behavior makes no sense if the claim were true. So what is actually being sold? Usually one of 3 things. Sometimes it is real software with a beautiful backtest, meaning it was tuned on old data, like a student grading themselves on last year's paper after reading the answers. Impressive looking and worth very little for tomorrow. Sometimes the screenshots are simply fabricated, profit images take 2 minutes to fake, and testimonials can be bought. And sometimes there is no bot at all. The subscription money, or worse, the deposited money, is the entire business. Some of these operations quietly pay early users with money collected from newer users, a trap this channel has covered in its own video, and a story that never ends well. Either way, remember the pattern. When someone sells certainty about markets, the certainty is the product, and it was manufactured for you. Where do smart people go wrong here? 3 places. Mistake 1. Trusting the backtest. It would have made 300% last year. Sounds thrilling, means little. Studying the old answer key after the exam is easy, and every failed bot in history had a beautiful backtest. The only test that counts is the future, and the future is exactly what nobody will show you. Mistake 2. Trusting the win rate. An 87% win rate sounds unbeatable, but it says nothing about size. A bot can win 87 small bets and lose everything on 13 big ones. Plenty of ruined traders had excellent win rates. Without knowing how much is won and lost each time, a win rate is decoration. Mistake 3. Borrowed credibility. The pitch says, big banks use AI trading, so this app is the same thing, only smaller. It is not. The firms that genuinely profit from computerized trading guard their systems the way exam boards guard question papers. They hire scientists, they sell nothing to the public, and they would certainly not rent out their edge for $200 a year. So what can you actually do? 4 things. First, run the seller's test on every prediction product you ever see. If this truly worked, would this person be selling it to me? Let the doubling arithmetic do the talking. Second, treat promised percentages as a stop sign. Markets do not pay salaries. Anyone promising fixed monthly returns from trading is describing something that does not honestly exist, and market regulators around the world warn against exactly this, because in many countries, promising assured market returns is itself against the rules. Third, use AI where it genuinely helps you, explaining financial terms, organizing a budget, summarizing a document. We have a whole video on using a chatbot as a budgeting coach. That is AI in its right lane. Fourth, if you invest, consider the boring path that needs no crystal ball. Owning a wide slice of the whole market, adding money steadily, and letting years do the work. That approach never needs to predict a single question, because it owns the whole exam hall. And if you are still wondering whether some hidden lab somewhere has cracked it, here is the honest edge of what humans know. The best quantitative firms in the world, with the best scientists and the fastest machines, extract small, hard-won advantages at industrial scale, with enormous cost and real risk. And even they have losing years. Not one of them claims 90% accuracy. Not one of them sells an app. The gap between that reality and a social media ad is not a gap in technology. It is a gap in honesty. So remember the exam that rewrites its own answer key. Prices already contain everything the crowd knows, which means profit hides only in surprises, and every pattern the machines discover starts erasing itself the moment it is used. AI remains a brilliant grader, guard, and organizer in the world of money. It is simply not a fortune teller. And anyone selling you tomorrow's answers has told you everything you need to know by the very act of selling them. Alex kept his $10,000, and now you know exactly why. My question for you: what is the most convincing AI trading pitch you have ever seen, and looking back, what was the tell? Share it in the comments, because your example might protect someone else.